Hello, YouTube world. This is WIL. I think I'm going to hang on until somebody joins or somebody comes in the room. I want to talk a little bit of stocks here. Anybody losing money out there? Anybody making money out there? I see I got 3 people watching. Say something in the chat. 3 people is watching. Say hello. Make yourself known. I appreciate the like button somebody just hit. Okay. Okay, we got Charles Gilmore. There you go. Oh, he's in the TVIX. All right. Charles, you wanna come on the panel? I hate just talking out loud to myself. I need a broadcast buddy. We can talk about what your emotional I'm presuming you're on a roller coaster, presuming you have some emotional response to what's going on in the markets. Can I send you the link, bro? If you don't mind, put your email there. I can send it to you. I don't want to. This is my first ever. Okay, okay. You just getting up. Okay, that's cool. That's cool. TVIX. So you are. So you still you own TVIX. Okay, that's cool. So you own TVIX. Did you own it prior to me talking about it, or was it related to me talking about it? Uh, Just trying to see where you enter in with TVIX, or better yet, when did you buy it, or like price point, if you don't mind? Because I know I was wrong in January when I said that was the peak. There you go. There you go. That's a good move. Yeah, as long as it's not too much money, TVIX is that thing is gonna move wicked. I think it's going to get too high for people to buy real fast. The Sneak 2008. What's good, bro? What's good? What's good? Oh, okay. So I knew, Charles. I knew there was somebody that I had talked to earlier about it, and I really felt badly when it tanked from, like, I think it was like 100 down to 24. But we talking about a triple leveraged ETF, so it takes giant steps. It's going to get back up to that level and beyond pretty fast, because when you look at the Dow, well, now we'll be putting up some charts. When we look at how steeply that thing is falling, it's gonna you know, the rise in TVIX is gonna correspond, with that. It's gonna spike just as the major indexes are diving. Okay, we got the Sneak 2008. Are you do you own anything? The Sneak. Give me entry in the chat. The Sneak. What's your involvement in stocks? Just tell me the industry if you want to tell me the particular stock. Are you in? Are you out? Are you hodling? I'm gonna tell y'all right now, there's no hodling on this channel. We don't hodl. We learn to read the chart. Hodling is dangerous advice. 1 second, still driving. Okay, okay. Well, now be safe. Be safe. Be safe. Well, let me say, I don't have my prepared script in front of me, but let me just say I'm not a financial advisor. I'm just a YouTuber. Don't take advice from people on YouTube without consulting a registered, professional, registered financial planner, financial advisor. So take everything with a grain of salt. But yes, okay. The Sneak says that yes, I do have some stocks. Okay, okay. Charles Gilmore 3 says I saved a lot of money in the stock market. I got out when it was great, and one day I'll get back in. Okay. Okay, you just want to see the price drop. Yeah, yeah. What's up, brother C Boogie? C Boogie. I sent you an email with the link, C Boogie. The people that's on that I communicate with in the back channel. So you got it. You got the link. So hopefully Ulysses and some other folks who I know are actively watching the charts can come on. But while I'm waiting, I'm gonna start. I'm gonna throw up the Dow if I can to so we can see this spike. Talk about some of the things that I was talking about on the Black Brain Trust on Fridays when I do a sort of a market wrap. But last night we got into deep conversation and we didn't get a chance to chart. So you guys listening, of course, you see I don't really have a lot going on in my channel. Most of my contribution is on the Black Brain Trust. And on Mondays, I think they discuss is it tech space and technology, and on Wednesdays they talk about geopolitics. On Fridays it's economics, and I believe on Saturdays they talk IT, and that's good information on that IT summit. That's the Black Brain Trust, and they tell and explain educational opportunities. The group especially focuses on information or educational opportunities that's free or cheap. They promote micro degrees, and these are like quick fix programs. You know, that can get you in the door with little or no money. And these are in industries where there's a great demand, like automation and robotics and blockchain and various things like that. So we want to kind of keep the Black Brain Trust in mind and kind of peek over every once in a while and see if they might be discussing something that someone may need to hear. If not you. So let's see. Let me see if I can get this chart going here. Uh, okay. All right. Now what we got here is this is a monthly chart of the Dow, and this goes all the way back to like this view here. I can make it go quarterly. We can see. I think this chart right here kind of says it all. This goes all the way back to like 1910. I like to say this is if your family, and I'm mostly talking about Black folks, our family, I think I can broadly say that we don't have a culture of participating in the stock market for multiple generations. This is like 1915, so we're talking about 50 years out of slavery right here from the beginning of this. This is America. This is American empire. America becoming a world power. If you had a tradition in your family of participating in the stock market over the generations, I think it'd be pretty hard for such a family to be struggling economically. This is what it's about. We have to make our peace with capitalism. Capitalism has lots of problems. I think it has lots of inequities. I think that we do need to have better some oversight on prices, because it seems that whatever you get paid on your job is never quite enough for you when you get to the counter at the store. And I have a friend of mine, I'm always arguing with her, and I tell her that they know how much money you have in your pocket when you walk in the door. When you go to the store, they know how much money you have in your pocket when you walk in the door, and they set the prices accordingly. It's very easy in demographics to know how much money you have in your pocket, because when you buy a house, the bank has certain requirements that you have to meet in order to buy that house. And most houses in the same zip code cost about the same amount of money. So when a store goes up in a neighborhood, they know how much money you have in your pocket. And they set those prices to take as much money out of your pocket as they can. So you really can never get ahead in capitalism if you're just trying to get rich off of wages. We have to participate. My mission, my personal mantra, or desire for the Black community, my people. I love my people. Is that we have to make our peace with capitalism. We need to participate in this system on three levels. We're already participating at the labor level. We're the best laborers coming out of slavery, and we're hard workers now, and we're underpaid now. But that's one level of participation. The next level of participation is as a business owner. And another in level of participation is as an investor. I believe that we must exist on at least two of those three levels. We must have at least two of those interactions or engagements with capitalism. Because if you're just a laborer, you're always going to be a couple of paychecks away from, being homeless, hungry, or, you're always going to be underemployed, or, somewhere on the beggar end of the spectrum. And we can fix this. So that's where my passion for stocks come in, because I've never had a job that I really loved that much that I wanted to do forever. I've always wanted to be free. I've always wanted to be free. And the short story of how I got into stocks is I met, there was this white guy on a job. I got a good job, got a very good job when I was young. I was let's say a broadcast engineer, and I was making a very good living at a young age. I dropped out of college. I ran a business that's related to broadcasting, and that was pretty successful. And one thing led to another, and I ended up getting a pretty privileged job, and it was great for a while. And then you hit the proverbial glass ceiling. You hit the ceiling. You realize that, okay, there's really no further I'm going to be able to go in this job. It's for a lot of reasons. Part of it is racism. That's a part of it. But another part of it is just competition, because at those higher salary levels, it's really not enough room for everyone to go higher. Okay, especially in a profession that I was in. It was not like IT, where you can go, where you have a whole lot of places you can work. In that particular profession, it's like a pyramid. The higher your salary goes, the fewer places you can work. And so I kind of hit my head on the ceiling, very young. And so I started investing in participating in the company 401k. And this was in the 90s, and I invested in a mutual fund that was focused on internet stocks. I put all my eggs in one basket, and it worked. So there goes, that story. People say, never put your eggs all in one basket. Well, I put all my eggs in one basket. It was the right thing to do at the right time. And I was adhering to fundamental analysis at that time. So that's, I was looking at hearing all the industry buzz about how this new thing called the internet was going to take over the world. The companies were just laying down fiber optics for this fiber that you get from Verizon right now. All this stuff was a dream. The internet was at it was really, I don't even, it didn't exist nowhere on the level as it does right now, and it exists right now. And so my account went from 50,000 to 250,000 in a very short amount of time, maybe about 2 or 3 years. So that was the equivalent of, say, like a cryptocurrency that everybody's into now. And I saw that, and I was like, whoa, my retirement account dwarfed my salary. And so I said so the first lesson I learned from that was the importance of paying attention to that retirement account. I said, because that's what's going to get me rich, not my salary. Okay. So unfortunately, though, when when the tech bubble burst, I didn't know to sell because I was a fundamental trader and everybody was telling me to just hold on and hold on. And so I got into, of course, I lost that money. It came, I started at around 50,000. I went up to 250 and it came all the way back down to 50,000. I, and at the moment when that internet stock bubble burst, gold had broken out of like a 20-year sideways move where gold really did nothing for like 20 years, you know. And then gold ran up to, what, 3,000 or about. From prior to that, it was hovering around maybe $300. Went from like $300 to $3,000, you know. And so I learned from that. So I got really upset. So I wanted to know, how did this happen? What did I do wrong? What was wrong with the information I was receiving? I was receiving Newsweek, Time, Smart Money, Kiplinger's, you name it. I was getting all of the financial magazines. I'm reading the Wall Street Journal, and I still lost all that money. So I asked the question, who made money? Who won? Who won, and what did they know? Who won and what was their strategy? So once I asked the right question, the answer started to come. And I learned that the people making money were practicing this thing called technical analysis. And once I got into it and started reading the various styles of technical analysis, it made sense to me. And I could see that what I was looking at on charts or projecting from the art/science of technical analysis, it would come true, you know. So I start turning the television off at that point. And that brings me to this point today. Let's see, let me check up on what Brother Charles is saying in the chat. Man, I'm sorry, brother. I was behind. Okay, I like to learn and grow. Okay, I wish more people talk about things like this. I'm always about trying to. Yes, that's one thing, Charles. You are absolutely open-minded and always willing to learn new things. If anybody listening here, you should check out his channel. He talks about a wide range of things on his channel. You never know what you're going to get on Charles Gilmore III's channel. It says, I am so against institutionalized certifications for chances of employment. Totally against it. Institutionalized certifications. I don't know what you mean by that. Do you mean like the certifications like people get in IT? But we'll. I like certifications. I wish that I wish that more fields were like the computer industry, because I'm an autodidactic, okay? And so in the current system, autodidactics get punished because we have this thing now where education has been, it's like it's become a business now. And so there's like obviously you can see it's a degree mill. They're just handing them out now. You don't really, you can't assume that someone has been educated just because they have a degree. If someone has been educated, that should be self-evident. And I'm shocked. Honestly, I'm shocked the number of people I meet when they tell me that they have a degree. I'm like, wow, I should have known that. You shouldn't have had to tell me that. It should have been self-evident, and too many times I'm shocked. And I suspect you have to be shocked at times too, because you don't see any evidence of it. And so now these people with the paper are just presumed to know better or to know more. And that's a problem in society. I think if more fields should have a certification where people should have to test, to prove what they know, and that should take precedent over if you have the degree, if you taught yourself or where you went to school. None of that stuff should matter. Can you do the job? Can you do the job? Let's see. System needs to be revamped. The quality of life has improved, but the wages and ability to earn and save is not improved. That's right. Our spending power has not really increased much. I refer to this as slavery 2.0. You know, we're everyone is basically in debt bondage. Okay, they got you in, under your mortgage, your car note, your car, your school loan, and you're passing passing that on to multiple generations. I mean, this is bondage. Okay. Let's see. Most people understand business but have nothing that they want, have nothing that they want to sell. Okay, or any skill in selling something that they don't believe it. Yeah, yeah. It's hard. Selling is a skill. It is a skill. How can you provide as a service something that you don't believe in or something that pays? Okay. Most people do not understand investment. You're right. We're going to try to fix that. One investment doesn't have some type of risk. That's right. That's right. We're very risk averse. I don't know this to be true, but I always wanted to do some research on how our people, what was our involvement in the stock market during the Great Depression. So many people lost. I would like to know, how did that affect the Black community, the losses in the stock market during the Great Depression. Maybe we got spooked. Maybe that's why it wasn't normal, a part of our culture to invest. But I started talking about a white guy at my job. I was about 22, and he was like 21. I was like 23. He was like 21, and he knew all about stocks, and I knew nothing. I knew nothing, and I'm a pretty competitive on certain things, especially something like that. I didn't like the idea that he knew something that I didn't, about something as important as stocks, and he seemed to know everything. I knew nothing. I'm like, I have to fix this. So I went to Borders bookstore and I bought a couple of books to help me understand how to read the financial section of the newspaper. Nothing to understand those symbols. Back then, the stock prices were in symbols in the newspaper. It was a code. You had to figure out what the letters mean in the sequence that they were. It's complicated, but I had to. I tackled it. It was that important to me. I'm like, the competition starts right here. If I'm competing with this white guy on the job for equality, I can't compete for equality if I'm not equal or superior. Okay, so I related to that. I got to solve this problem, and I noticed that there was, and I asked him, how did you learn this stuff? He said, well, my father taught me, and it's just something he would talk about every day at dinner. I'm like, wow, nobody in my family talks about this. I didn't have anybody in my family that I could go talk to about it, and I said I was going to be the one in my family to change it. So now I'm teaching older people and younger people in my family. So it's that important, and we have to, embrace capitalism beyond just being the laborer. We show up and look for a job. It's got to, our engagement with capitalism has to go deeper than that. Okay. All right. Most people understand consumption is not investment. Most people understand business is not nothing they want to say. Okay, you can talk about it as a service, something that you don't believe in. Most people do not understand investment. I got that. Let me scroll down to the bottom. I'm going to skip some of them, Charles. I'm not against taking a test. Okay. I'm against spending. Yes, I'm absolutely against spending $500,000. Yep. Yep. I had that issue in college. That was part of the reason why I dropped out. Like I said, I run a business, and I was a student at Howard. I was a film major, and they were teaching me things that I already knew. They was giving me a whole lot of video courses and stuff. I told them, I said, I'm majoring in film, not television. Why am I spending I'm looking at the syllabus. It's going to be years before I get into some film stuff, and I'm spending all this money treading water. I don't think I'm going to grow from this curriculum, you know? And so basically the dean, he told me, I expected an argument from him. He said, pretty much you're right. He said, but you still need this degree because this is the way society is structured. He said, you know, because of you, someone like you that's motivated to go start a business and teach yourself how to do this or that and how to write, you know, business proposals and grants and things like that. You know, you probably on one level, you don't need universities for for that part, the motivation part. You got that, but you do need this paper because it's a form of a certification, and society, you know, values it. So he was right. In short, he was right. He was right. But let me get back to the charts. I just wanted to give you guys just a quick background on how let me see, get me a template and let me. Most people can learn on their own. Yeah, that's right. Yeah, yeah. A lot of people can learn can learn on their own, but we don't. But society, but we have to have a way of testing what the quality of what people know to make sure that they really know what they're talking about. That is the downside of being an autodidactic. You need community. You need someone to check you to say, okay, you know, you got that part wrong, because you can be wrong for a long time when you're teaching yourself, you know. So, you know, let's see, I don't have my page up. Who entered? Who goes there? Oh, Mike, what's up, Mike?
What's going on, brother?
What's happening? What's happening?
What I missed so far?
Oh, just me rambling about how I came to value stocks, or the significance of being increasing our financial acumen. You know, embracing this part of capitalism. You know,
Okay.
that's pretty much it. And I was just talking about going to just show something briefly. I've started talking about this Dow, and then I just drifted because, you know, you know me, I can ramble. But here's mhm.
No, I was just gonna ask, did you cover any of the common staples for S&P?
I didn't come. I have not done any chart reading except this one that I just launched. This is the Dow, so you haven't missed anything. I
Okay.
just been rambling.
All right.
So now I'm just gonna go. I'm gonna try to be more structured now, because Mike V likes structure, y'all, and I know that, and he's right, and so he has a good influence on me to keep me focused. He doesn't know that, but I do. I get that energy from him, and yeah, I use that. All right, brother.
Mhm.
Okay, what we got here is just to fast forward to recent times. Let's see. I have a video, y'all, on my channel from January of 2018. Write it down, watch it. It talks about Elliott wave theory, and it breaks down my wave count for this Dow, and that's my thesis that I'm working on. So there are 5 waves in Elliott wave theory, and then according to my thesis, this is wave 4. And the two biggest drops in Elliott wave theory is the even numbers, the wave 2 and wave 4. Wave 2 here is what we call the Great Depression. This is hell. The only wave that's on par in terms of percentage decline, you know, at equal to destruction of this wave 2 decline, is the wave 4 decline, which is where we are. I had been talking about this when I first came on YouTube last summer. That would be the summer of 2017. I was saying that you know, talking about Elliott wave theory, and that we're approaching wave 4, and that we're going to have a decline on the scale of like Great Depression, and so that's published. So, and I was doing that intentionally. I wanted to put it on the record so that people can start to have a little more regard for technical analysis. And when I was saying it a year ago, you know, people, you know, it sounded like it was crazy talk, but now everyone is equating what we're going through to the Great Depression. Now, what we have here is, I'm gonna run through this real quick. Now, definition of a trend is a higher high and a lower low. Let's just take this section right here just to make the point. Okay, you got a higher high, a peak, a peak, a peak, peak, peak. Okay, that's a higher high. Lower low. I'm sorry, and a higher low. Higher high and higher low. That's an uptrend. So you got the higher high part. The higher low is, a step. You walk up the steps to the next step. The next step, you run up your staircase. Each step you go up, it's a higher low. That's a uptrend, and a downtrend is the reverse of that. So when you're looking at when you're buying into a trend, that's what you're doing. You want to make sure that the price does not make a lower low. So just think of it in terms of swing high, swing low, swing high, swing low, swing high, swing low. Just oscillating back and forth on up. As long as that pattern of a higher high and a higher low is maintained, the trend is said to be intact and therefore safe to join the trend. But when it makes a lower low, that's a cause for concern. Now this is January, and this was the last significant low that started that final move to January, and then we fell, but we didn't make a lower low. I was wrong in that January video. I thought this decline was going to be this decline. So I was off. I had no problem admitting when I was wrong, and I was wrong. Okay, so it fell to this low here in April, and then it continued on. Now, when this low was reached, it didn't make a new low. This went up, and on the Black Brain Trust every Friday, I was keeping everyone focused on this low right here to see if we would make a lower low. Well, Wednesday of this week, we made a lower low. And as you see, the price went right through it. It didn't respect it at all. Okay. And price movement, this would be called a support. Okay. Every place where it stops and bounces springs from, that's called a significant support. So in order for an uptrend to be intact, these supports have to be honored. Well, this price didn't honor the support. And when that happens, a lot of these automated trading systems that control a lot of money in the market, the program knows to now regard the market as bearish, and it's looking for opportunities to sell as opposed to opportunities to buy. And so you're going to see more of this. Okay, so that's what's going on with the Dow and the S&P. The S&P is going to look similar, and that's why it picked up. And it's also telling that we had this nastiness on a Friday, because in an uptrend, people, what's it called, FOMO, fear of missing out. People are concerned about missing out on the gains, and so they feel very comfortable about leaving their money in the market over the weekend. But when markets start going south, people are afraid of losing their money, and they fear leaving their money in there on the weekend. And we have New Year's Eve is Monday, and we have Christmas on Saturday. So the markets are not going to be open for much of that time. So if someone would have to leave their money in from Friday and not really be able to attend to it again until like Wednesday. So that is telling that no, people don't trust it enough to leave it, to let it sit there over the weekend. But you want to jump in, Mike?
Well, I was just really curious about where the strength of the dollar versus the euro. I know Europe is going through its crisis right now with all these protests over austerity, as well as U.S. sanctions. Well, not sanctions, but tariffs. The delay in tariffs, 90-day delay. So maybe that's having an effect on the value of the dollar.
Could be. Let's look at dollar and see. It's also the scary about this. The dollar. This is the dollar Swiss franc.
Mm-hmm.
It's just no particular reason that that's one that I like to look at. Let me get these lines off. Come on. Get all that stuff off clean. Just make it plain. Okay. This is a daily chart, dollars, Swiss franc, and just a bigger perspective of what's going on. The dollar is attacking this high from, look at the date here. It's like December of, my eyes are going bad, 2016. So basically, I maintain we're going to keep going higher. We're going to make a higher high. And so the interest rate increases are designed to make money off of the demand in the dollar. You can't so because when something is in demand, you can charge a premium for it. And that premium is what we call an interest. And so there should be little debate about the fact that the dollar is going higher. You can't charge interest rate on something that's going to be losing value. That's so you can only charge your interest rate because something is in demand. So it's definitely going higher. And you can see just technically real quick here, um, this candlestick here made a higher high, big bold one, and it's going higher. I'm gonna keep it simple. We got this is a stochastic oscillator. It's just showing you momentum. And this, when it gets around 20-ish, that's considered oversold, and it means that uptrend, a reversal is happening soon. It doesn't mean as soon as it go down there. It just means you're in an area where it could reverse soon, and it'll run up to it like 80 or above. And so we got a clear shot of uptrend in this oscillator. So that's the bigger issue with the dollar affecting the euro currency. Now, the euro is EURUSD. I haven't looked at this in a long time, but yeah, and this low, what am I looking at first of all? This is a monthly. And let me get rid of these lines and stuff. Okay. Just so I can get some perspective. Okay, so this is from February of this year. Okay. So the euro fell, and I think the euro is going to keep falling. So yeah, you have this line. And sometimes, you can do something as simple as put a trend line here. At some point in the past, I was looking at this chart, and I had this trend line here as a warning that once the price broke that trend line, there would be trouble. That's why that was there. So you got your wave 1, 2, 3, 4, 5. And so, it happened, and look at it. Okay. So we'll see what happens. So at this point, all eyes are on this low here from January of 2017 to see if the euro is going to keep falling. The euro, weakness in the euro and strength in the dollar corresponds with weakness in gold and weakness in oil. Okay, so there's that. But I mostly wanted to talk today about where is the money going. Let's see. So that we know that it's not all bad news. Okay. Let's see. Yeah. Okay. This right. What I'm looking at here, these are called market heat maps or market carpets. Come on, got these ads. I'll get rid of this thing. Okay. At a glance, this is pretty much the S&P 500 and broken down into the different industries or sectors. And just at a glance, it's bloody. This is blood in the streets. These are the components that cause the Dow and the S&P, why it's diving like it is. But you do see specks of green here. What do you see right here in this little section? Green. This is utilities. Remember when you were a kid playing Monopoly? Whenever you would lose in Monopoly, what you do, you start buying those utilities. When you had a lot of money in the beginning part of the game, you didn't want those utilities. You wanted Park Place and Boardwalk, okay? Because you could charge more rent when people land on that. But once you lose money, you start to want to buy those utilities because they're everywhere. And you can start to slowly build your bankroll back up with those utilities. Well, that's what happens. That's what's happening now. And this chart takes this out of the realm of opinion. You can just look and see. You can just throw a dart over here in the utilities sector and you can make money. So all of this money here is fleeing here. It's fleeing here. Now and it's going here and it's going into bonds. And it's also going to go, I'm trying to find the little sector. It's a sector called uh consumer uh it's the consumer staple sector, but I can't see it on here. Um I'm annoyed. I'm annoyed by this particular chart. I'm gonna do it another way. Um, oh, this chart right here. This is from one of my favorite sites. It's called Bar Chart, and you can go there and look under stocks and come over here to industry performance. And what I like to do is let's see. First of all, I don't buy individual stocks. I buy ETFs that are based on industries, because if I was buying company stocks, then I have to know that the CEO is not an idiot, and that the CFO is not stealing money, and that they're not lying about the earnings report. I don't care about all that. I just want to make money. And so I'll buy the whole industry group. Therefore, company specific things aren't, that's not important to me. I'm just looking at the macroeconomic environment, and I'm putting money in entire industry groups that will benefit from the current trend in the macro environment. Now, what we have here is a grouping of industries, and by performance, I'm going to reload it to get it updated. I think I had this up yesterday. Make sure we get the best prices. All right, so you can see this is weird, strange how they quote this. Well, this is commodities, and that's going to be like, oil, and food items, and steel, the stuff that the tariffs are focused on. Um, those things, even gold and metals, those things move. They go down when dollar is strong. Okay, and if dollar starts to rise, and so the dollar is starting that trend up, and that's hurting the commodities. And they quoted the 3-month change as down 25,000% or whatever. And we know that you can't go more than 100%. So the way that they quote this, what do they say? 3-month percentage change, the difference between the current price and the settlement price from 3 months ago, expressed as a percentage. Presumably, I guess this would be if you purchased it today. It's like what is the percentage from the current price to the high? Because we know you can't really go more than 100%. So it's like if you were to buy it now and go back up to the high, presumably this would be your gain. So just know that the large number is bad. I guess that's the short of it. So it's getting pretty destroyed. Now, just looking at this, so this 3 months would be October, or like October, or beginning of October, and this would be in 1 month. So in 1 month, look at biotech getting destroyed. I'm sorry. I'm gonna go back to it again. You got biotech, you got medical. Now, these could be great companies in here. The fact that a stock is going down, it doesn't mean that it's a bad company. And that's my objection to fundamental analysis, because all that looking at the earnings report and all that is it's telling you about the health of that industry and the management of that company. But sometimes investors will just leave a whole industry because of the macroeconomic environment. They won't even wait for bad news to show up in the earnings report. They'll just leave because the dollar or the interest rate, did something. They'll just abandon ship. So that's why I lost all that money when I was young in my 20s, and I had my $250,000, and I watched my internet stock mutual fund go from 250,000 down to 50. If I had known better, I could have, just as I went from 50,000 to 250,000. What's that? 500%. Uh, yeah. So why couldn't I, if I had known enough, why couldn't I just repeat that and go from 250,000, to what would be 500% of that? That would be 2.5 million. No, no, that's wrong. I would have had more. I'm trying to get the same percentage move from 50 to 250, and impose that from 250 to whatever that number is, but a whole lot more. I could have probably been retired, in my mid to late 30s. Okay. So this is how you find the point of all this is so that you can know that there's a way to follow where the money is going. Okay, so this tells you where the money went. Now let's let it left here. Let's see where it went. Oh, I'm sorry. I'm sorry. I want to see. Okay, you got some food. You got medical instruments. Those are these schools that you paying your loans back to. That's the S&P 500. The retail index. That's all your stores in the mall. They're getting destroyed. Property insurance, because housing is down, so they're gonna get destroyed too. The interest rate rising makes it harder to qualify for a loan. So if you're not buying a house, you're not buying their mortgage insurance, you're not buying the property insurance, you're not. So yeah, it's like the dominoes get set up. The computers. So the loans get when the money starts costing more, businesses can't get loans to grow their business, to create that new widget and hire more workers. So companies just leave certain industries when money gets expensive. So you can see all the things that's hurting. Energy. Okay, let's see who's winning. Okay. Utilities. We saw that on that other graph. Okay. Utilities. Utilities. Uh, this is going to end up dying. I don't know why this is here, but it's gonna catch up. So a lot of short traders, short sellers, they'll look at a list like this. They'll go like, "Well, wait a minute. What is this? What is this crap doing here? This got to die and turn red like everything else, you know." And so they'll still go in and start shorting this stuff, make some money. Non-taxable bonds. Okay, that's going to be good. Bonds, precious metal. Yeah, this is going to die too. So people are going to jump in and start shorting this. But this is my opinion. It's my opinion. Everybody on TV is saying buy gold, it's safe. Okay, we'll see. I'm the only one that you're going to hear say not yet. Uh, the the fundamental argument for buying gold is sound, but the technical chart says it's not the right time. So I think gold is going to dive like you see the S&P 500, and then it will be the right time. So we will get there. I just think we're not there yet. So beverage, this is going to be a good one. That's your Coca-Cola, your Snapple, and different sodas and stuff. That um, you can also, when you're looking for ideas where to put your money, you can go back to 2007 and 2008 and see how those stocks performed during that decline. And I believe sodas did pretty well. So what do we see so far right now? We got utilities and bonds, but I think the consumer staples sector is going to join it, and that is consumer staples is things like the staples items you need in the store, your food, you know, um, yeah, your food and vegetables and stuff like that.
Milk and eggs.
Milk and eggs, the Procter and Gamble stuff, the soap, the toilet paper, that kind of stuff.
Johnson.
Johnson and Johnson, right? That's the staples, the boring stuff that nobody wants to buy. I'm trying to right now. What I'm doing is there's a date here as I'm moving this slider, and I think October the 3rd. No, the date is here. October the 3rd, I think, is when the market started falling, and to now. And so this is Fidelity Mutual Funds. So if you're in a mutual fund and you want to see how you would have done in that period, okay, the gold one did well. We'll see how long that goes. Fidelity government, this is going to be bonds. It's going to be like treasury bonds. And this Spartan, that's a bond. So that's what we've seen up on the other chart is bond stuff. Municipal, that's going to be like a, um, a municipal bond, a state-based bond, basically. And your losers would be energy because energy is rolling over and gold, I'm sorry, dollar is getting ready to gain strength. So that's energy, natural gas, natural resources, biotech. Now, keep in mind, your utility companies are the customers of the coal and oil, energy and natural gas companies. The utility companies buy these items so that they can make the electricity and sell it to you. So when the substance that the utility companies need is going down in value, then that's extra profit for the utility companies. So that's why you see the utilities companies going up because they're benefiting from the price destruction we start to see in energy. So once you once I got into the technicals and I start and I'll give James Kramer some credit for this because I used to buy his books too, and he did a good job of in some of his books getting me to allowing me to understand the consumer. Uh, let's see, he's seeing businesses as consumers of products, that they need to consume something in order to make the thing that they make to make their widget. And so I would look at, he taught us to in his books to look at the cost of the resources the company needs, to acquire to make its product. And so once you start think of it that way, you don't just respond to a price going up and down. The next natural thing to ask yourself is who benefits from that? Who benefits from that? And once you ask that question, you'll be able to figure a lot of stuff out on your own, and you can run to the charts and see if what you figure out on your own is actually true. And so that's why I love technical analysis. And so we got here. This is another mutual fund company called Pro Funds. Let's see. I want to go again. October the 3rd. I'm looking there. Okay, you got all this red over here. Okay, over here. Okay, this is this section. Let me zoom in. Okay, these are mutual funds that short the market. So it says ultra short. That's what that stands for. So these funds are betting that the market goes down. So even if you don't know how to short a particular stock, you can buy invest in one of these mutual funds, and they'll short it for you. And so since October the 3rd, this fund here is shorting small caps, and that's companies. I believe the line is 250. What is it? $250 million, I believe. Companies that have less than that, or their market cap is less than $250 million, and the small companies are shorted the most because they have the least amount of money in reserve to help them through tough times. So that's a whole investment strategy that's based on, let me find the weakest link in the market and let me bet that they're going to eat the dirt. And so this whole fund just groups small cap companies in America, irrespective of what type of business they run. It doesn't matter. They just look at the size of the company and they say death to you. And they bet that those companies are going to decline. Now, that style of investing has result. It's the biggest winner in the last two since October the 3rd, and they're up 53%. So the point again to all of this is when you see the death going on and death and destruction in the market, just know somebody's winning. Somebody's winning, and you want to condition yourself to do the extra research to find out who's winning, because news, and I worked in the news business, news is what is new. So whatever is new and sensational, that's what they have to direct your attention to, but you have to like kind of mitigate some of that and get even balance and say, okay, we know who's losing, who's winning. And once you see who's winning, you see, and these gains and these funds right here are going to continue for a while. In my opinion, talk to your financial analyst. These are safe. These are safe, and they're going to continue moving. And you're not buying one individual company. You got a whole basket of them. So now when the market is rising, they have a ultra bull small cap fund, and that thing goes to the moon. So what goes up must come down. The same companies that caused it to go up, this fund shorts those same bets against those same winners to get the money on the way down. So this is the mid cap, which is a little bit bigger than the small caps, but they're not as big as the large cap. The large caps is what the S&P 500 is. That's the 500 largest companies. So that's like right in the middle in size. I don't know right off the top what NDX is, and that's Japan. And yeah, I noticed this the last time. It's strange that when our market goes down, Japan goes up. I gotta get into that and study that. I'm sure there's a very simple explanation for it. I just don't know, y'all. But I have noticed it, and I need to figure out why that is. So there's oil, and so there's that. And I rambled, and let me see if anybody's still out there, or am I just rambling? Okay, what's up,
No, no,
Load?
we're listening.
Okay, what's up, Loadcast? Lionel from Brain Trust Complex. Cool, cool. Okay, now I'll breathe, Mike, and accept questions or comments.
Yeah. So the whole on the tariffs would actually it has reduced the tariffs down to, I think it's like less than 10% or just about 10% on steel and other goods. Have you looked at your U.S. steel, oil?
Okay, let me look at the price. Where's that chart? Where is the chart? Is it this? No. Hold on. I got confused. Maybe I'll just start another one. No, but I like what I had. Okay. There you go. U.S. Steel. Is that? I'm trying to think. I'm trying to remember U.S. Steel. All I got to do is type it in. Maybe it's just X. These are options. That's not what I want. It's X. I'm surprised I remember that. Good Lord. This thing is. This is ugly. Okay. I like going out. This is a quarterly chart here because I like to get perspective and see the whole trend. I'm really just looking to see when this peak was. This is 2008. You'll notice that gold has been declining since 2011. Oil has been declining since around this point, 2008, and steel is the same. And what a part of this now, again, Mike can speak to this even better because he follows the news of the tariffs much closer than I do. I just try to stay mostly with the technicals. But as I understand this war, this tariff war, it began with America basically saying to China, "You're not going to dump your excess steel on us." Okay, I'm sorry, say that again.
It started under Obama with tires. So there was
Okay,
Chinese
time.
tires flooding American markets, and they put a stop to that, as well as solar panels. Remember that?
And then it became steel at some point.
Yep.
Okay, well, that's the point when I started paying attention to it, when it became about steel. Why? Because I'm biased in my focus of things that closely correlate with U.S. dollar movement. That's why I call myself Dollar Will, because that's my trading style. That dollar as a reserve currency, it resonates. Its movements resonate around the world. And so if you just lock on that to that relationship, you're going to be in sync with the way money is moving in the world. So this steel decline was or these tariffs. When you have excess, we produce when something is making money, which it did when steel went all the way up to $196. We're greedy. We it's natural, whether it's steel or oil, we're gonna extract too much of it to try to make more and more money, and so we end up creating an oversupply, and that oversupply, you have to flood it on the market once the prices go down, because you don't want to sell it for a price that's less than what it costs you to extract it or to create it. And so you end up flooding, dumping, large amounts of it into, trying to sell it, and selling people more than they need and everything, just totally killing the demand, and that destroys the price. And so what China was doing was trying to dump their excess steel on us, and Trump was saying no. So countries are really kind of in a race to get rid of their excess inventory, because the quicker you get rid of the excess inventory, then you can go into what they call just in time production, where you're making it as you need it, and not going into the red, creating this excess. So everybody's in this race to do that, and so China's like, okay, well, we'll dump ours on America. So so that just kind of caught that signal to me. Again, I'm really only interested in this from the standpoint of it being a large inventory, and that tells me that the decline in the commodities is still in process, because we have not exhausted that inventory. So that's what interests me on it as a technical trader. So um, this thing has more to go. I'm of the opinion. Let's see. This low is October, or it was the first quarter 2016. We were looking at the euro a minute ago, and it had a common low around this same point. Okay. Uh, just as I said, and when we were looking at the dollar chart, that the dollar was going to exceed its high and make a new high. I believe steel and the euro are going to exceed their low. I do not believe this low is going to hold, but that's my opinion. We'll see. And now all I have to do is wait and is remember the rule of a trend. As long as these candlesticks make a lower low, a lower high, and a lower low, then that's the direction. And so I don't have to consider that I'm wrong until it makes a higher high. So that's my I just follow the charts, and I'm not guided by what people say on the news. I just go look at the chart, because this is money. This is real money that's moving the markets, and this is more important than, in my view, or in the way we technical traders think. Put your money where your mouth is. Don't tell me about it. Be about it. So yeah, I think it's going. I think it's gonna get there. So
What
what we can do in the short, you would just take a trend line. We don't have to make this super technical. You know. Again, y'all saw me with the oscillators earlier. I can get all into that, but sometimes you just do something as simple as, as it moves, you keep drawing this line. As long as the price stays, respects that barrier, then we're going down. It crosses over it, then you go, okay, let me look further. We could have a reversal, but there's no reason, no need to try to get ahead of it.
Well, you should also take into consideration that GM closed several plants or has announced the closure of several plants, so that's going to affect the import of steel and aluminum, other components that make up the manufacturing base of automobiles.
Yes, that's absolutely going to have a negative effect on it.
Same thing.
And home sales are going down, so so construction is going to be affected. Nobody's building any. I mean, we're not building any bridges or anything like that right now.
Well, there is a initiative on that was I think it was launched maybe under the Obama administration, maybe just as Bush was leaving for Reconstruction, American Reconstruction Project. So a lot of your bridges, I think there's 8,000 plus bridges in the United States that are actually condemned, listed as condemned, that need to be rebuilt, and they're not safe for passage, even though people still drive their vehicles on them. The government still lets you drive on them. Those bridges need to be, one, de-leaded because they still have a lot of lead paint on them, and two, they have to be parts replaced on them.
Well, if you're America and if you're the government, and you have data about inventory levels, your information is better than everybody. You know that these prices for the materials the prices are inflated. The government knows that more than anybody. So the beauty of this is when these prices drop or correct, get to where they need to go, the government can step in and start buying, or signing contracts for large quantities of these materials at bargain prices to help. That would be to our benefit, to be able to get the materials we need to fix the bridges and to make the infrastructure improvements to do it at the cheapest material cost possible. And that kind of involvement, when government steps in and starts utilizing those materials, that could be the impetus for the next bull market. But there's no reason for the government to come in and buy these materials at these prices. But I think so. It's what you said. That's the marriage between the fundamental and the technical. What the fundamental people saying is true. As from the technical side, we just argue about the timing of it. The timing of it, because it's true doesn't mean that that's going to happen right now. It's going to happen when the time is right. So yeah, government's going to step in. They're gonna turn the markets. They're gonna signal the next bull run. And the great thing about a time like this, I mean, the bad thing is you're going through the worst, likely going through the worst decline of basically anybody alive. I mean, if anybody was alive in 1929, how old would they be right now? They'd be what, 90 years old? And they would have been like a baby in 1929. So in order for them to have to be an adult, with some real memory of it, they'd have to be what, about 110 or something, and able to remember.
Mm-hmm.
So really, nobody, hardly anybody alive has any personal experience with what we are going through right now. Now that's the bad news. The good news is, at the end of it, the millennials are sitting at the catbird seat of the biggest bull market that anybody has experienced, since the end of the Great Depression. So it's a good news, bad news story. And so the goal is to not lose all your money during this decline so that you can have some money to invest at fire sale prices. And this could be the thing to set millennials up, man. I mean, they could be living a great life if they can just, be smart about this and stop saying, if you're a millennial, hodling is something that should be something you never say. Don't hodl. Learn how to read the charts. No hodling.
Okay, I made a mistake earlier. I misspoke. It's called the American Recovery and Reinvestment Act of 2009. So that was That was the last time I think they passed something initiative that big.
I'm sorry, that was the last time they did that. That was what happened in 2009.
The I spoke earlier about the an American Reconstruction Act about maybe 2005 2002, but it was actually 2009 for the American Recovery and Reinvestment Act under Obama.
Okay,
Yeah,
and,
so that's supposed to address a lot of the infrastructure issues. So a lot of your streets that are being paved, you know, with these bike lanes and stuff like that, um, that's where that comes from. Your
okay, but
sidewalks having access,
okay,
wheelchair access. So
but did they? But so you're saying that addressing the infrastructure like bridges and stuff that's a part of that?
yeah, I believe that's a part of that.
Okay, how have they made to your knowledge? Have they made much progress with bridge construction or repair?
Um, to my knowledge, they've identified, you know, the 8,000 plus, but what they've done to actually address it, I don't know. I know the bridges that have collapsed, like the one in Minnesota, the one in Seattle, or wherever it was over in Washington, Oregon. You know, those are the, you know, the catalysts for, you know, go fix all these bridges. So what they've done, I have no idea after that. I
Wow.
know in Massachusetts we had 800 bridges that were condemned.
Wow. Okay.
Yeah, so a lot of those bridges have been, I think 90% of those bridges have been fixed so far.
Gotcha. Gotcha. Well, at this point, I'll just be. Oh, well, you know what? Charles is still here. This one's for you, Charles. Charles made a Vegas bet. This is back in January, and I'm apologizing, Charles. I was talking up this fund. It's called it's TVIX. It's a short fund, and what this is a in short, it's a bet that the S&P 500 is going to fall. Okay, and so back in January when I said it's going to fall, it's going to fall, and I was wrong. You know, I talked it up, and some people, you know, got into it and it was 154 at its peak. And I was talking it up before it really bottomed. So this would be at its best price, and that would be at the market low. I'm sorry. Yeah, at that time, right? And so depending on where they bought it, they went underwater on this. But I'm sure I said at the time that it was going to be a long thing, you know, and don't put no serious money in it that you could afford to lose. And so it dropped as low as $24. Okay, and from this low of 46. So you know, from this low to this low, it went from 46 to 24, or from the peak of 154 to 24 or 25. But it's rolling. It's starting to you got huge volume spikes. So this is big numbers of people betting against the market, betting that the market is going to fall. And you got this stochastic oscillator rolling. So all the signs are it's going to rock and roll. Um, you had the lower highs all the way down, and then bam. Now, in trading, this is what the hardest thing in trading is to acquire the discipline to wait and to tame the ego. So stop trying to be right and guess the perfect bottom. That's the hardest thing in the world to do because our ego gets in it and we want to be right. We want to get the bottom. Well, the best thing to do, and this is an exaggeration, this is a monthly chart. The best thing to do is to wait until this high is taken out. You know, so we talking about like here, and you can either buy on the breakout or usually what happens, the high is made, people make a lot of money from the low, and then they sell because you know they want to pocket their gain. The price comes back down like it did here, boom. And you can see it's not much different between the peak of this candlestick and the low of that candlestick. So it price broke out and it returned just about to the breakout level. and then it resumes. So, so the difficult thing in trading is to acquire the discipline to wait for this event, as opposed to jumping in here, losing all of this. Is to wait for this event. Now, I struggle with that. It's a personal thing. Everybody that trades has their own discipline issues. Okay, like I said, it's a personal thing. So it's like we can tell you the rules and we can show you the rules. It doesn't mean that as a human being that we can follow all the rules. It's like eating 3 times a day, eating vegetables and fruits and exercising. We all know to do it. We can tell you to do it, but not everybody does it. So, but it's off now. It's gone. It's like it broke above this candlestick and it's trending now. It's gone. This is money. This is money in the bank. Who knows how high this thing could go? I mean, I don't know. Even if it returned to, revisit this level where it broke through this floor. I mean, look at these prices. The low is what's that? That's folks. That is. Wait a minute. Am I looking at this right? I'm not even gonna say that. That's crazy. Look at the low number, y'all. That's ridiculous. I, I'm not gonna. I don't know how high this thing is gonna go, but look, definitely more than 154 for sure. This thing is gonna move a mind-boggling amount, and I would not be surprised if they at a certain price when this thing gets to be $200. A lot of people will drop out because they just don't buy stocks that cost that much. They don't have the money to buy one share. So the fact that this thing is sitting here is $77, by the end of January, most people are not going to be able to afford to own it. The thing is going to get up to several $1,000s a share, and they're not going to be able to buy it. But the people
Isn't
who hold it are going to get paid.
isn't that why they have ETFs?
This is an ETF. Actually, well, let me see. Is this cat? That's a good question. Is this considered an ETF? Now, on this site bar chart, you want to see what something is. Let's click profile. Okay, it's an exchange traded note. It's similar to an ETF. Strange. It says the velocity shares suite of 6 volatility exchange traded products. I think that's what that stands for. Includes 2-time leverage long and inverse proportions on the S&P 500 VIX short-term futures index. So by buying this, you're participating in like the futures market and stuff. Without knowing anything about the futures market, you get a chance to get a little bit of that money. And by the same token, I'm always talking on the brain trust that this same concept of coming up with the ETF, that's going to allow people to get involved with cryptocurrencies. It's going to happen. We're going to end up with a cryptocurrency ETF, and that way you'll be able to go to your broker and trade a symbol, and you'll be able to participate in cryptocurrency without knowing anything about a wallet and exchanges and all that. None of that stuff. You're just going to go to your broker, and it's going to be a 3 or 4 letter symbol, and you're going to buy it, and you're going to own Bitcoin and XRP and Litecoin and all that stuff we talk about. But they're gonna fix that. It's going to happen because the people want it. Okay, investors have employed strategies combination. Yeah, so yeah, this is ETFs, ETNs. It's very, very, very similar. um the distinction is not that important between ETFs and ETNs, but that's pretty much it. Um, let's see. That one was for you, Charles. So I think man. Look at this oscillator even went above its high. Man, you're gonna be golden, man. You're gonna be golden with TVIX. I just wouldn't be in no big rush to get rid of it. I am gonna regularly talk about TVIX, but let me say this to anybody watching this: this sucker is unreliable, or all of these, not this one in particular. These inverse ETFs are there's a fear that they don't always do what they are supposed to do. And I'm going to show you an example, one that stung me. Okay. Let me show you gold. And I'm going to show you one that stung me. Okay. This is gold versus the dollar. Wait a minute now. Come on. Uh, wait a minute. X. Oh, I know why. I'm spelling it wrong. XAU. Okay. Okay. This is third quarter of 2011. So that would be like September-ish or whatever. September, October, the summer. That's yeah, more like the summer, leading up to September in 2011. I think it technically was September of 2011. Gold started to decline. In theory, when you buy a symbol that's shorting gold, that's supposed to go up. Now, I'm gonna show you how it doesn't always work. Okay, um, I bought this thing here, and I got jammed. I mean, I got out of it when it wasn't doing what it was supposed to do, but I'm now back into it. But I wasted a lot of time with this, so I'm fighting against it's gotten personal with me, which you should not. It should not get that way. This thing owes me. This owes me. Okay. So basically, in 2011, it did a little run here, and then and it got as high as like $4,000 from this low is like 551. So it did pretty good. Now at 20, let's say the spring of 2013, it started diving. Now gold was still going down for large parts of that, and this thing was going down too. I'm like, wait a minute, it's not supposed to go down with gold. Let me take the averages off. It's not supposed to go down with gold. This is supposed to be the inverse of it, and it's not. It wasn't doing it. So here we are now. The question is it what's it going to do? Let me look at it on the daily. It looks like it got this big giant green candlestick. It looks like it's trying to go. Looks like it's trying to pick up. So I got out of it at a point, and I'm back in it, trying to score on my belief that gold is going to dive. If it does, this is going to spike. But again, this is lunch money. You don't put no real money, no serious money in here that you can afford to lose, because investing in these triple leveraged or these inverse ETFs, I'm talking about TVIX and DUST. I'm not talking about those pro funds, mutual funds. I've followed those for a long time, and they seem to do what they advertise that they're going to do. I feel safe in those. Okay, that's just my opinion. But talk to your financial analyst. But as for DUST, this is a tricky sucker right here. Okay, so beware. But if you put like an amount of money that you spend on Jordans, or maybe that you would spend on a frivolous trip, that think of it in that way. You don't cry about the money you spent when you went to Vegas, and so I call it Vegas money. That's the way I look at it. You have to find your own comfort level with how much money you're prepared to risk. To my logic, I said, look, I would routinely go to Atlantic City and Vegas and lose $2,500 and call it fun. Okay, so if I could call that fun, why would I hesitate to take a chance, an educated chance in the stock market, an informed chance at least. But what say you, Mike?
No, I agree with you. Much money only. We are not certified financial planners. If you want to certified financial planner, go to cfp.net and find one in your area.
Yeah. Let me see what we got here. Oh, okay. Charles never lost on it. Oh, okay. Oh, he got it cheap, man. I'm glad to hear that, man. Okay. You bought 5 shares. Okay, you made $360 profit. Oh, way to go! Way to go! Way to go! Good, good, good. Well, that's pretty much unless somebody has something else they want to address. My main objective for coming on today was to one allow people, and I'll look at Bitcoin. We're gonna do some. I'll do 1 or 2 cryptos, but the main thing I wanted to convey to everybody is that you don't have to be depressed about the market going down. Don't be depressed. Be informed. Okay, be proactive. And I wanted to show you that people are making money and there are ways you can make money. I showed you where the money is going. I showed you how to determine and track where the money is going yourself. You know, like say, let's say if this was the Dow or S&P, you find a point where it started to decline. You go to these market, this is called stockcharts.com, and you can go there and they have these market carpets, they call it here. You can put in Google stock market heat map or stock market carpet, and you're going to find lots of sites, you know, with these types of things. And I what I like about this one is it lets you scroll and define to the exact day, October 3rd. So when the stock market goes down, I know what industries or what stocks lost the most and which ones gained the most whenever the market does a move. I want to know who's winning and who's losing. And so if you get in the habit of doing that over time, you'll know who the winners are. And then common sense is going to tell you that when the time is right, that's what you need to be in, you know? And a lot of times, the same industries that go down, they are the ones that come up. But in this long, that's kind of different in this longer trend. But I'm just talking about in a normal uptrend where the stock is making higher highs and higher lows, but it may just go down for 3 or 4 days. You go in and you see which industries that are participating in that trend had the greatest pullback in that say 3 or 4 day period, and that's what you're going by because they're participating in the trend. They're following the rule of higher high and higher low, but they also have been the most profitable. So that's how you know what to buy. It's not rocket science. You're in this to make the most money possible safely, or presumably that's what you're doing. You know. What I want to do a couple. Which one? See Bitcoin, Mike.
Yeah, we could look at Bitcoin. Do we look at Ethereum?
Now you guys see me toddling, making this quarterly, monthly. The reason I do that is because in Elliott wave theory, downturns have a ABC pattern. That's the way it is, and making it a quarterly chart or monthly chart, it makes it easy for me to see what the significant retrace was. Like this would be the A wave, that would be the B wave, this would be the C wave. And that's why when I'm looking at the daily chart, it's too many green candlesticks for me to, you can make too many errors with Elliott wave theory trying to figure out the correct wave count. That's the criticism of Elliott wave theory. And you can Google that too. And there are lots of great videos online about Elliott wave theory and on YouTube. And I'll be posting some, but I'm gonna be honest, it's just gonna be redundant. There's lots of stuff out there. So
Investopedia.
Investopedia, my favorite site. That's what I like about Investopedia is they have an awesome glossary. And when I was just starting out, it's like that glossary was made for me. It just spoke like simple language, and I seem to be able to understand the way that they describe things. Um, so let me go to weekly. So yeah, I said that that ABC pattern. Now, what happened recently, we got this big green candlestick, and it looks like Bitcoin's going to do a little bit of a retrace. We'll see if it, this would be the ceiling, or a ceiling. We'll see if it respects it. If I were to, you know, when I see something like this fat red body here, and then there, and this one there, this is a natural resistance right there. I would take, I would be paying attention to Bitcoin, not and seeing how far it goes. Now you can also, again, just a trusty trend line. See what it does. See if it violates it. Now, if it violates it, I'm looking to see, like on the Black Brain Trust, when we were talking about Bitcoin, and when we had this floor here, and the price was down. Let me just do it like this. When we were at this point in time, and the chart looked like that, I actually want to move that because I would like to make this go this way. I said then that we're going to break through this low. I don't know how far we're going to fall, but at some point we're going to make an approach, possibly back up to this point or in the neighborhood of this, and that would be the B wave. So this would be the a B, and a C, and the end of that C would be the end of the decline. Is what I said then, and I'm sticking with it. I still think, and this could be the retest of this failed support. So usually the saying in trading is support becomes resistance. So it could come all the way back up, but we'll see. And what's the rule? As long as it makes a higher high and a higher low, then you have to respect that trend. But once it violates it, it makes a lower low, then again, especially with the thesis that we're going to do an A, B, C pattern, the first sign of trouble, you have to respect that, the bigger thesis. So we don't know what this thing is going to do. I'm looking at a price level around 1,500. And where was that? Somewhere in. My eyes are going bad, y'all. Trying to get it. I think it was this. And I'm gonna show you. I'm gonna put this here, then I'm gonna show you how I Now, what's frustrating about this page or this chart is usually under that's why I said technical analysis or art science. What usually happens is you get a ABC pattern where a wave would come down to like this 100 and it would retrace 50%, which would be this line. That didn't happen. And we see here, and then it comes down to this next Fibonacci extension level. That's off the charts. That's below zero. So that's telling me right there that this is a non-standard wave. The bets are off. So my traditional way of using my tools, my Fibonacci tools, don't apply. Okay, that's why on a lot of charts, a lot of market technicians are not. I see them being just as confused as me. They're not making no hard line in the sand about how far Bitcoin's gonna fall. So let me just assume that since this is what I'm calling the A wave, A, and then this is the B, and then the whole end of the trend is the C. let me presume. Let me look at it this way: A, B, C, and see where that goes. What I'm going to do is try to get this. Come on, give it up. Let me just give myself some space. Okay, trying to get it here. Trying to get that there at the bottom. See, it's still off the page. It's just confusing to me. So my Fibonacci tools is not working for me because we're running out. We can't go below zero. So what I did was I looked at like this big breakout right here. So this would be like a natural area where you got a support here and a breakout here. That's a pretty clean area where it could happen. But what am I going to do? I'm just going to watch the rule of a higher high and or in this case a lower low and a lower how's it go? A lower high and a lower low. I'm just going to follow the rule. So once we finish this retest and start falling again, I'm going to put a trend line on it. Just like if I put a trend line on these candlesticks, it would have identified this pop right here. Well, when we finish the same with the C wave, when we start the C wave, I'm going to put a trend line on it. And when the price violates it, I'm going to look for a point to get in. You're not trying to pick the bottom. You're trying to notice that the bottom has been confirmed. You're not trying to pick the bottom. You want to let the big money out there, let them do their job. So that's Bitcoin. It's a mystery. This thing is rising right now, but I don't know anybody that believes it, anybody that trusts it.
I think the lowest it hit was 3,100 a week ago.
I said way back that was A level. A level. I don't know if I don't trust it. I mean, do you feel comfortable with it? Here's another reason why I don't trust it. Let's look at this symbol. Um, Bitcoin. This is the value of Bitcoin relative to the dollar. So if the dollar is gaining strength, that strength in the dollar is going to negatively impact the value of Bitcoin. I can't see this thing gaining value with the dollar getting ready to spike. I don't trust it. I don't trust it. Now, eh, dollar strength would make me not buy this no matter what the chart says. That's the way. That's just me. That's where I want all the systems moving in the right direction. Now, when the dollar gets to that, it reaches its high, the charts indicate that the trend is over and the dollar is declining, then I'll feel comfortable about getting into Bitcoin or any cryptocurrency that's quoted with the dollar. I don't want to. I don't want to bet um, against dollar strength. So that's just me.
Now, early in the summer, you had predicted that it would, by end of fourth quarter, it would be down to below 4,100.
I said I quoted some levels where this breakout could go, and I said I didn't say that would be the bottom. I said that
No,
when we
no.
get to that area, we'll see. And yeah, this is 3,100. I think I did say something about this area. Look like kind of something could
You
happen
said
in that area.
you said it would probably hit below 4,100 or below, and it did hit 3,100 as of the other day. So I think your predictions have been right in terms of where it's going to go. And this was maybe 3 or 4 months ago you said this. So
Right. Well, but when I was making those targets, I was really just trying to forecast where the A wave would be, because I believe that in Elliott wave theory, the retrace is going to be ABC pattern, and within the A there's an ABC, within the B there's the ABC, within the C wave there's the ABC. It's called a fractal nature of waves, and so I was just trying to predict the A portion of the decline. And there's going to be a B portion, and then there's a C. See, once we complete this and it starts falling, I'll be able to whip out my trusty tool, and I can make a projection on how long the C wave is based on how long the A and the B wave are. So it's sort of like a puzzle. Once the puzzle starts to fill itself in, then I can use this tool here. The tool I had when I had the 100% line and all that. I'll be able to use that tool to forecast a better end. Now the thing about it, a lot of other technical traders are doing the same thing. So maybe the fact that so many of us think a particular way, maybe we're causing these markets to stop at these points, sort of like a self-fulfilling prophecy. Maybe it's just an extension of groupthink, collective, behavior. Everybody's got the same tool, and everybody's drawing the same trend lines, and making these same extensions. So when the price gets to that level, people, maybe that's what's going on, that people just jump in and stop the price at that point. That's really all I'm doing. All I'm doing is using the Fibonacci extension tool, because that's a common principle in trading for price extensions. That's all I'm doing, and just because everybody else is doing it and everybody else thinks that way, and the market seems to honor these prices, these price levels. That's all I'm doing. That is really in essence what technical analysis is. There's nothing magical that the price has to do that. It just seems to do that. And again, maybe we're just causing it because, you know, as a man thinketh or as people think, maybe, like I said, self-fulfilling prophecy.
Now, do you have a few seconds to go over Ethereum?
Sure. And that's what ETHUSD.
Yeah.
I might want to take a look at Lionel's. What's the one? What's the one that he watches? Not Ethereum.
XRP.
So when? Yeah. I think that's it. Okay. Now this is interesting. This is very, because we got like a wedge pattern here. Okay. Let me see something. Makes me wanna see the tool. Okay, running off the page. Let me try another. This is what I'm doing here. Y'all close your eyes. Some technical person gonna be like, "You can't do that. You're wrong. What you getting ready to do? It's my chart. I do what I want." I'm not telling you guys to. This is kind of non-standard. I'm just doing in the extension from this B wave to the C wave now. And the fact that you see this thing popping up, it lets you know that what I just did with that tool, other technical traders apparently did the same thing with the tool. The price came right to that level. See, we all using this tool, and I think we're making these prices do these things around these price levels because of our reliance on these tools. Now, is this the end? The bottom? I don't know, but this is what I'm gonna be looking at. This bottom right here. I'm gonna be looking to see if the price encroaches on that. And another thing, you don't have to rush. That's the beauty of technical trading. You don't have to chase. Never chase. Even if this is the bottom, we're going to get some type of a retest. Okay? It's going to at some point it's going the people that bought in here will have made so much money. Well, the first thing you're going to look at is this. This would be okay, price dropped down to here, swung up, then came here. First thing you want to look at is this high. That's 126.99. Does this serve as resistance? So that's the first move. And if it does, let's say it keeps going up, then you put a trend line here underneath this. So you have this support, just imagine a line connecting this. And let's say the price keeps going and it breaks through this. Okay, so that would be a good bullish sign. Okay, but then you got this ceiling here, which is representing, that floor, that broken floor that caused this decline. And you want to see if it goes through there. So if it breaks, it's either going to break this support that you have for the uptrend, or it's going to break through this ceiling. If it breaks through this ceiling, that's a good indication that the bottom is in. If it breaks this support, then that you have to take a position that the downtrend is going to continue, and then you start looking at your candlesticks make lower lows and lower highs. You see how you sort of like triangulate it. I mean, is that making sense?
Yeah, no, it makes perfect sense. Makes perfect sense.
So yeah, and so you guys have, you're a computer guy. You guys have had. That's why I want y'all to get into this, because you guys have had like some serious math in college. Y'all can take these concepts. Your creativity is gonna spring into action, and you're gonna come up with ideas. In technical analysis, you are allowed to create your own systems now, because if they work, you can show it on the chart. And there are people that sell their systems, and they learn that coding language. There's a coding language that's used to create apps for like trading for traders, and people are paying, man, they're paying $10 a month, $20 a month, or sometimes $1,000 a year and stuff, to buy subscriptions to use your tool that you created. So you guys with that deep math, y'all, if y'all get into technical analysis, you're gonna come up with some stuff, because I've come up with things. Now, what I'm showing y'all here online is just the stuff that's for public consumption. I have my own proprietary things too, so and most people do, and and invariably you will come up with things, because you're going to see patterns. You're going to notice the nature of how prices move, and you're going to come up with your other ways of tipping you off to how far the trend might go, or when the trend is over. And and a lot of people on television making these calls, they have some proprietary things that they're doing that gives them confidence. And you'll know when your thing is working when you start kind of reaching the same conclusions as a lot of them. You go, okay, I'm on the right track. We're coming up with the same numbers. And especially when I hear people on TV talking about their fundamental traders, and they come up with the same numbers as me, and I'm a technical trader. I'm like, wait a minute, now how you come up with that number? I'm not buying it. I think it's a whole lot of people out there that are technical traders that are pretending to be fundamental traders. That's just my.
I think I think technical traders are contractors now. Somebody's outsourcing the work to them, and then they bring back the data for them for the client.
Yeah, that would be, yeah. If they look, if you, I I would not use a financial uh planner or financial analyst that didn't either know technical analysis, or that didn't contract for some chart analysis, of the major indexes. I wouldn't do it. I'd run. I wouldn't do it. I would not consider that. I wouldn't trust that person to give me advice. No, no, no. The technicals work. It's too important to ignore. You know, I mean, James Cramer, back in 2007 and 8, before and then the market was crashing, and when he had his meltdown on TV, with they know nothing. Well, he wasn't really into technical analysis back at that time. He has changed. He's had his come to Jesus moment. And he now every week he has somebody come on his show, sometimes more than once a week, to talk about the technicals. He has this thing every Tuesday called From the Charts, and he does a very good job. And he talks the fundamentals and he talks the technicals, and you get a very balanced view. So I recommend his show. You can learn a lot. His books and his show, good information there. So I would say, yeah. So you're going to triangulate this Ethereum, put a support here, and take a look at this resistance. See if this low on September the 12th of this year. See if that serves as resistance as well. And either the price is going to crash through this ceiling, or it's going to break through your support line that's on the bottom. And your stochastic is going to come up to this level, and you'll be in danger. 80 is 80ish. Well, this has been rolling over at 71. So when you get up there, you go, okay, I start to pay attention. Then you look at the candlesticks. So now you see what we do. We look at the oscillator. We look at the support levels. We look at the candlesticks. We see if it's making a higher higher and a lower low. So we have a confluence of things that we're looking at. And when the signal price reverses, you'll see like this fast line cross below here, the orange cross below the blue. That's telling us that the momentum is shifted. Then we'll see a violation of the trend line or the support line. And so then you go, okay, I'm getting alarms going off. This price is reversed. And that's what technical trading is. We don't know why the market changed direction. Frankly, we don't care. We just know that it has changed. You may get the answer, the fundamental explanation why the market changed direction, but you will never get the answer in time. The answer will come later. The technical information precedes the fundamental data. And so I trade the technical information, and somewhere down the line in the future, we get the truth about what happened fundamentally. But if you can't use fundamental data to time your actions. Fundamental data can help you feel comfortable that your trading is rational, that your investment is rational, what you're doing is rational, but it's not good to use fundamental information to tell you when to buy or when to sell. So fundamental analysis can tell you, if you're talking about individual stocks or even industry, fundamental analysis can tell you, it's best used to tell you what to buy. Technical analysis is best used to tell you when to buy it and when to sell it. So,
All right, Dolo. I
all
have
right.
nothing else.
All right. Well, anybody in the chat, thank you very much. Do I teach this one-on-one? Sure, the sneak. I'll put my email here in the chat. And you guys better write this down, because I am going to erase this email, because we got some some crazies out here. And so I'll leave it there, but pretty much as soon as I end this, I'm going to go in here and take that email out. Okay. So if you want it, y'all need to write that down. So I want to thank everyone, and I want to remind you again that we're not financial advisors. We're just some folks on YouTube offering our opinion. What is that place, that site, Mike, for financial planners?
CFP.net.
Okay. Yeah, go to what is CFP.net, and get you a financial advisor, and see if they use technical analysis, or that see if they at least contract for those services, and get you some professional guidance, especially if you're getting older. In a time like this, you need to be smart about your money move right now, because you could put yourself on easy street. And the main thing we're trying to accomplish in technical analysis, or just investing in general, is to avoid big down moves like this. If we only do that, we're going to end up with good returns on the other side. So thank you, everyone. Later.